On this week's episode of Help, the market is crashing. Okay, I'm just kidding. It's not really crashing, but everybody wants you to think that it is, okay? And I've been asked over and over again, what should I be doing in this market? Do I hold? Do I sell while the market is still a bit hot? Do I consider maybe a cash out refinance? Or maybe do I take out a home equity line of credit? This video is going to help you sort through all of those different ideas and hopefully navigate you into your best decision based on your goals. My name is Austin Zabak. If you're brand new to my channel, I'm a real estate agent. I'm also a real estate investor. I've done about $1 billion in real estate transactions in the last 8 years. So if you're brand new here, I would greatly appreciate it by the end of the video if you get a little bit of value to smash the like button for the YouTube algorithm and subscribe if you have not already. So let's just start by talking about the cash out refinance option, and this is something that I'm actually personally about to do on my primary. Now, I've been building an addition on my primary residence, and maybe some of you have seen that, and as soon as that is complete, I'm going to actually be doing a cash out refi. So while interest rates are much higher today than they were at the start of the year, a cash out refinance can still make a little bit of sense, especially if you want to capitalize on your current level of home equity. So here's an example. Let's just say you have a $300,000 mortgage. It's a 30-year fixed mortgage, you put 10% down, and your interest rate is 2.5%. Your payment with taxes and insurance will be roughly $1,350. Now, let's take that exact same home, but with a 5.5% interest rate, assuming you were to refi it since interest rates have continued to go up. That puts you at about an $1,800 a month payment. But here's the deal. Depending on what happens in the upcoming market, you might want to be a little bit cash heavy. So let's just say, for example, that you bought a home in 2020 and that's how you got such a low interest rate. But let's say since 2020, you've gained a ton of equity in your home and you really don't need all that equity. Maybe you have a good job and you can afford your payment going from $1,350 to $1,800. And you'd rather have the equity as cash in the bank account in case the market were to turn a little bit and you saw a really good buying opportunity. That extra cash in the bank would allow you to potentially make investments if the market were to go down a bit. What I guess I'm getting at is it's really up to you to actually sit back and assess what your goals are. For me personally, like Warren Buffett said, when others are greedy, you want to be fearful. And when others are fearful, you want to be greedy. And I will say that the market is shifting. Now, I'm not saying it's going to crash, okay? You got to stay to the end of the video if you want to learn that information. But what I am saying is we are experiencing a bit of a shift. Now, if you're one of those people that believes as we shift, we're going to see more buying opportunities to invest, then again, you want to assess your goals and figure out maybe the cash in the bank makes more sense. And, $500 extra a month or whatever it might be is not that big of a deal. So let's talk HELOCs a little bit. And if you're not familiar with a HELOC, it stands for a home equity line of credit. A HELOC is essentially a revolving line of credit using your home as collateral that can be used and paid off over and over again. Essentially, kind of like a credit card. You'll get a revolving line of credit which you can borrow against, pay off, and repeat. And you only pay interest on the amount that you've actually borrowed. Again, very similar to a credit card. Some lenders offer options of a home equity line of credit as a fixed one-time lump sum that is issued and then paid back over time instead of the traditional variable interest rate. According to Investopedia, home equity hit a record high of $9.9 trillion at the end of 2021. So should you jump on the boat before it sets sail? That really is the question. So when is it a good idea to take out a home equity line of credit? Typically when used to increase your home's value, when you're doing renovations or things of that nature. Using the loan to invest in a project that will increase your home's value can help mitigate the risk of the actual loan. Look, it can take several years to build a large enough emergency fund for you and your family, and dealing with random emergency expenses during that time can feel like a constant uphill battle. But depending on how much equity you have in your home and your lender limits, you may qualify for a big enough credit line to meet all of your needs even for long-term emergency expenses. The best part is you get quick access to cash. If something important were to arise, you can access the funds extremely easily. Pretty simple. You can basically write a check, you can request a bank transfer. It's kind of like using a debit card associated to that particular account. So let's just go ahead and talk about when is it a bad idea. Typically when you're using the money to shop for that new car or that new watch you've been eyeballing, yeah, that's right, okay? Let's not use your line of credit against your home to fund a lifestyle your income can't handle. You could honestly lose your home, and if your financial situation makes it tough to keep up with your line of credit payments, the lender could foreclose on your home, and that would of course put you in even a worse situation than the one that you started in. So like we talked about in the beginning of the video, the market is shifting, and it actually is shifting in the favor of the buyer. And in fact, there's about 1.5 times more inventory on the market than we had about 90 days ago, according to Realtor.com. So what you've all been waiting for, is the market gonna crash? Is now the time to sell? Should you get out? Should you run for the hills? What should you ultimately do, right? And if you've been following me for a while, or you've paid attention to anything that I've said, then you might know what I'm going to say. If you're brand new to my channel, then definitely stay till the very end. So in my opinion, I believe that there is no perfect time to sell, and there is no perfect time to buy. The reality of it is, when you go to buy a home, you're typically either gonna pay for it in the price of the home, or you're going to pay for it in the interest rate. And typically, you're either gonna have high interest rates and lower prices, or you're gonna have lower interest rates and higher prices. But when you look at it from the standpoint of your monthly payment, again, just objectively and in layman's terms, without really getting into it, your payment based on those two scenarios will be roughly the same, give or take. I also am one to consistently preach to dollar cost average into the market. So if you're watching the video and maybe you're thinking about buying an investment property, you want to own a rental property, you would like to eventually own maybe a duplex or a triplex, and maybe you just want to, buy your home at the perfect time, or sell the house you're living in at the top of the market and then buy back in at the bottom of the market. I think the people that do it for that reason and that reason only, in my opinion, are probably approaching it the wrong way. I think that when we look at buying or selling a home, the question should be, why are we buying or why are we selling? And first and foremost, we need a place to live. So if you're looking at selling, then you have to ask yourself, where are you going to go? Because if you're just gonna turn around and go buy another home, then unless there's a reason other than, just the money, then it's like, if you're in a 2.5% interest rate, let's just say, 3% interest rate, why would you sell your house to get the equity to turn around and buy another house at a high interest rate, where now that equity or that cash you have in the bank is going to go towards a higher monthly payment? And also, if you're a buyer and you're like, I just don't know when to buy, I don't want to buy at the top of the market, right? If the market crashes, then I'm going to be out of luck. Look, the reality of it is, I believe interest rates are going to continue to go up for a little while. Now, nobody knows exactly, nobody's got a crystal ball, including me, but I believe that we could see interest rates go as high as 9 or 10% over the next 12 or 18 months. And the reality of it is, a 6% interest rate's better than a 10% interest rate if that's where we're headed. So I actually do think that now's probably not a bad time to buy, if you plan to buy the home and live in it for a while, okay? Don't go buy right now if you're not sure, you can hardly afford it, you're really not sure if you're gonna be there in a year from now, you're not sure how stable your job is, or whatever the case might be. But if you're dead set on an area, your job's pretty stable, you've got a stable income, you have your emergency fund figured out, you've got your finances in order, and you plan to live in that house for the next 3 to 5 years or more, then there really is not a bad time to buy, because historically, real estate prices will always go up over a long enough period of time. So even if, and I don't think this is going to happen, in my honest opinion, I think that the market is going to level off, I think it's going to plateau, I don't think we're going to see the crazy appreciation we've seen lately, but I don't think prices are just gonna plummet, okay? Again, it's just my opinion. But let's just say they did. They did go down a little bit, but you plan on living in the house for the next 5 years. Well, historically, your average recession lasts, give or take, about 18 months. So again, if you plan on buying and living there for a long enough period of time, historically, housing prices will always continue to go up. As a matter of fact, if you bought in the peak of the market in 2007, 2008, right before the market crashed, and you held, okay? You didn't panic sell. You had what a lot of people call nowadays diamond hands, okay? And you still owned that house today, you would have actually made a lot of money, okay? So again, historically, houses will always go up in value over a long enough period of time. Now again, the same is true if you bought that same house in 07, 08, right before the market crash, and 09 rolled around, maybe 2010, and you panicked, you freaked out, you're like, oh my gosh, I'm losing everything, and you sold. Yeah, you probably lost a bunch of money, okay? So again, you can't sell in a down market, but you can't lose money unless you sell, okay? So as long as you don't sell, you won't lose money. The entire point I'm trying to make, to summarize the entire kind of third point here, is that basically there is no perfect time to buy or sell. Nobody knows when the top is, and nobody knows when the bottom is. That's why they say hindsight's 20/20. And a lot of the people that are, multi-billionaires, they believe in dollar cost averaging. People that invest, billions and billions of dollars into the market believe in the DCA method, which is the dollar cost average, which essentially is the opposite of trying to time the market. Hopefully you enjoyed the video. Those are the 3 things that you might be thinking about doing going into all of the uncertainty in the world moving forward. Hopefully you got a little bit of value, you learned a thing or two, you have a little bit of a better idea of what you're going to do. Again, my name is Austin Zabak. I would greatly appreciate it if you would do me a huge favor, smash the like button for the YouTube algorithm, subscribe if you have not already, and comment down below what it is that you're going to do. Are you gonna buy? Are you gonna sell? Are you gonna get a HELOC? Are you gonna do a refi and get cash out? Maybe you invest back into the market if things were to go down a bit. What is it that you're gonna do? I would be really curious, and I'll look forward to seeing you in the next video.